Hello, ladies and gentlemen. It's Modern Investing Show. My name is Sasha Star, and I would like to introduce our panelist. My co-host is Peter Bennett, a
Right.
former Wall Street professional. Hello, Peter. Welcome to the show. And founder of the network, Nick Paliveda. Welcome to the show, Nick.
Student
And
is here.
okay, and we can start now with. Mm, Basically the state of the market right now. As I said last week, there is a window dressing it going on, which will end on April 1st. So we have hopefully 2 more positive days. And I would say we have still probably another 2 weeks of market basically sustaining its gains or would go even higher from that point on. Now, second half of April and the following month, I'm not so sure. And I think I will continue to raise cash. This strategy so far works for me really well. I can't complain. So I keep high yield dividend stocks untouched. I I haven't touched them for the last uh, probably 2 years or so, and very happy about that. And all other trading positions, including options, I have to adjust and watch almost on daily basis. Really, you cannot just get into positions and just forget about it for years or so on. The investment of the past, buy and hold. Sorry, it's no longer working with us, as you know, and so it's every day there are actions, and you have to really just observe and understand what's going on. And Peter, I would like to know your opinion, where you agree with me and where you don't.
Well, first of all, I have to give you credit. A few weeks ago, you said the market would go up, and I've been nervous about it, and I'll talk about that too. But
Yeah.
so, and I put some more money into the market, even though I built up cash, and it's up about 5 or 6%. It's actually gotten officially out of correction territory. And
Mhm.
maybe you're right. Maybe it's the window dressing, but this is the most uncertain market I've seen. For 20 years, I've always been able to just say, okay, this is a good company. It's got a good dividend, or it's a good option to sell against. But now the macro picture is very dangerous. And mainly it comes down to something I've been talking about for a year now, but now everybody's talking about it. So it's nothing new. If you should turn to any talk show, news show. So, first of all, the Fed, as a matter of fact, this morning, the 2 and 10 year inverted for a little while. And I could see this coming. And that's a sign of recession. It doesn't always mean recession, but it often means recession. And that's
Yes.
scary in itself. So the question is, how high will the Fed have to go to control inflation? And that's something nobody knows. By the way, you said something about efficient markets and the market is, accounted for everything. But I thought about that a lot for the week. And, that is true of all known information. But the problem is there's more unknown information right now than I've seen in a long time. So, first of all, nobody knows where the Fed has to go to raise to control inflation at all. And they need to control inflation eventually, or it's going to really destroy the consumer and the economy. So, their plan is to go to 2.5, 2.75. They consider that neutral in the short range, and then maybe go beyond that and then take a nice slow year walk. But, some people like Summers, who was the Treasury Secretary, I believe, under Obama, and who's a liberal, and also Larry Kudlow, who's a conservative. Both are saying no, he has to go much higher. Kudlow is saying he's going to have to go to 6%, which would be unbelievably high. And I don't agree with that necessarily. But so this is a big question. Now, what will it take to slow down the economy, slow down inflation? It's going to be a while, and people are going to get more and more nervous as they raise rates, and as the question comes, are they going to keep going? Now, the other thing is oil's a tax, and I'm very concerned about oil. I have been concerned about oil for a year. I listened yesterday. The head of OPEC, OPEC group, was saying what I've been saying, that the companies don't want to invest anymore. Why would they keep pumping money into something if they won't be in business in 20 years or 30 years or potentially? So they're not really putting it out. The oil companies have huge problems with supply chain, with labor. And I have a chart actually here, um, of U.S. production, and it's not going to fill in the gap. So if you look here, the blue area, that blue area shows that actually before the beginning of the year, they've been almost flat. U.S. production, even though the prices are so high, it takes a long time to ramp up. They need to get the equipment, the supply chain issues. There's so many issues, and they're not even pushing to get it. So uh, U.S. isn't coming through. Venezuela's not coming through because they can't even restart their thing. So as an example, the International Energy Agency said the following. First of all, they said oil markets are headed for the biggest supply crisis in decades. They said this in the last 2 weeks. They also said the proposed disruption in Russian oil could cause a global oil shock. And Ukraine seems to be in a kind of long-term status quo now. It may not, but even if they go into work it out, it's going to take a while for the oil production in Russia to return. And then, even if that does, there's still an oil shortage. I thought there'd be an oil shortage before, and it was already going up before the Russian thing. So there could be a very big shortage of oil, and who knows where it could. I mean, some people are saying 135 this summer, but we're heading into driving season, and the U.S. drivers are driving more than anywhere. World COVID's, as it goes away, people are talking about traveling more oil use. Something's got to give. So, I mean, I'm still in the market, but I'm more cash than ever. As a matter of fact, I want to note that with this European crisis, my three of my core holdings, which I've talked about for a long time now, are MPLX, EPD, and USAC, because they're pipelines and they're natural gas oriented. So with this crisis, I mean, Europe is desperate for LNG now because they don't want to get it all from Russia. And so these companies, at least one, there's no chance that the Biden administration will shut them down anymore. And two, there's probably a lot of opportunity to ship oil. So the last thing I'll say, and then I'll open it up to you, because who knows where the market's going. But this also makes me very nervous. So Charlie Munger is known as one of the greatest investors of all time. He works with Warren Buffett. And he said that he thinks that he's predicting a painful crash in the market. That's his words. He said, he says, and the reasons are what we're talking about: interest rates. He's saying stocks are at nosebleed levels, inflation is soaring. He has something called the Buffett indicator, which a lot of people have heard of. In the finance, it's a market value of the market to GDP, and this is a chart of that. And if you look, you can see that over here on the end, that it's out of the trend line by far. So if it happens to come back to the trend line, that would be a drop from like 200% on the scale to about 130%. That's a big drop. So, and I'm not sure it will, because this is the other side of it. And so Munger has a quote, and he says that there's been excesses, there's too much liquidity, and that printing too much money could eventually cause terrible trouble. So that's the one side. The other side, everybody has cash. I have too much cash. You might have a lot of cash, and it's just sitting on the sidelines. So it's very tough because it's harder and harder to deploy the cash. Today, I sold some of my MPLX. It was at 30% of my portfolio. I couldn't, 25, 30. And so even now I'm still 30% in pipelines because I think they're a safe industry, and a little bit's covered by options. But so the investor still would like to buy bonds higher. So as bonds go up, maybe the investor will buy bonds, or they're desperate to find places. So who knows where it's going to go? It's just a very dangerous time, where it could go. It could do anything right now. What do you think?
I agree with you, but you see, my approach is somewhat different. Everything what you just said about the pipeline, about the price of gas and oil, and everything is already known. It's already factored into the
Is it?
price. Absolutely, because there is no surprises really recently, because we know that Germany, for example, depends on Russian oil and gas, right? So Germany will try uh, um, to cut its supply on Russian gas down to a quarter of its needs. So it's 25% of what it's taking today. So
Right.
obviously it will take more liquefied gas from the United States and so on. But again, it's all known in the market. It's nothing, something happened. Let's say a shock was perhaps February 24th when Russia invaded Ukraine. That's
That was
something.
a shock.
That's a shock, and it's a kind of a new factor, and so on. Right now, Russia is repositioning its mm, forces, and it's trying to get out of the Kiev area, so on. And
Well, they're just saying that. A lot of people think that they're just regrouping their troops, and you can't believe a thing they say, obviously, because they don't
um,
tell the truth.
I,
They'll
I,
probably regroup, and Putin's not giving up. I don't know how this ends, because I mean, I said originally, but I didn't expect to be this right. I said World War II was predicted to take a week or two, and I didn't think Ukraine. I thought Ukraine probably would take a week or two, but I wasn't. I was saying maybe it'll go much longer. Now it could. Who knows? I don't think Zelensky wants to give an inch, and I don't think Putin's going to take nothing. And so they could go. This is a stalemate. As a matter of fact, I read a quote. They said the Russian army is, too weak to win and too strong to lose. So maybe it's a long, long battle. Unfortunately, it's a horrible situation. I mean, I hope they settle, but I don't know how they agree now.
okay, one possible scenario, the conflict will be frozen, and everybody will stay where they are
Yeah.
today, and it will be frozen for next 10, 20 years, if not more.
Oh God. Oh
Same
my
thing
God.
what happened in
That'd be
Moldova.
terrible.
Moldova. They got a piece of Moldova. It's kind of, they put some kind of a funny republic, a new republic there, Russian speaking Moldova Republic or whatever it might be. And it's same for the last 20 years or so on. I'm scared about something else. I'm scared that Russians are taking their armed forces out of Kiev area for different reasons.
What's that?
Kiev today is a fortress.
Yes.
To penetrate that, it requires much more efforts than Stalingrad during the Second World War. And without somehow capturing Kiev, Putin will be so much short of his goals when he invaded. So, God forbid, he might use a tactical nuclear
Oh my gosh.
device. Yeah,
Oh my gosh.
that would clinch and instantly achieve all his goals. Now, obviously, he is under impression that he can do basically anything without worrying about being punished, because Biden said so many times that no way that NATO or the United States will fight on Ukrainian soil or so on. So Putin took it as an invitation to go in, to grab as much as he can. The only thing is, Ukrainians didn't listen to Biden. They have their own strategy, and that strategy is to kill as many Russians as possible and fight
Right.
for their homeland. So this
That's
is
scary.
one.
That's really
Yeah,
scary.
the use of nuclear arms that could affect, of course, everything. The world, as we know, stock market, of course, is part of it, and so on. So that could be.
Well, what
Uh,
about radiation? I mean, I haven't studied this, but if they use nuclear arms on, let's say, Kiev, heaven forbid, would that, isn't there a danger? I think there is that it would drift over to Europe or over to Russia?
Well, I'm thinking about tactical nuclear arms, which are not as strong as a full-scale
Oh, okay.
intercontinental ballistic missile. So it's different, of course, and it's not as devastating, and radioactive fallout is not as great because even if it's a full-blown nuclear attack, then fallout will go to Russia even
Oh
before it
yeah,
will reach
yeah,
the
yeah.
West
Oh, I see.
Europe.
So tactical
So
nuclear weapons
it will
wouldn't
be
do that. I don't
tactical.
really understand those. Yeah. Okay.
Most likely it will be tactical, but nevertheless, it's a horrible development.
Oh yeah.
For all
Or he could just bomb
humankind.
the heck out of Kiev with regular bombs and just try to flatten it, right? Just like, with his air force. Who knows? I mean, I've heard Biden administration is being slow at even delivering the drones and everything. They had the head of the military, I guess, Secretary of Defense, maybe on before Congress. They said, "Has it been delivered yet?" He said, "No." They said, "Do you know why?" And he said, "No," because he says he doesn't know why. This is the head of the military, but it's head of Secretary of Defense or something like that. And he's saying, "I don't know why," but he obviously must be that the Biden administration is holding this up because that that doesn't make sense that he wouldn't know. He must not want to say, which is that somehow they're holding it up, but they should be getting these weapons to them as soon as possible. But here's the thing: for the even, I mean, that would even be worse for the markets. But let's say this goes on a while, or if it doesn't, either way. I mean, you're saying everything is known, but you can't tell me now what oil is going to. This is an unprecedented situation in terms of supply and demand. But so you could say if the market knew it, then we would all know what the price of oil is going to be when driving season comes around. But you can't tell me if it's going to be $200 or 135. And some people have said $200. Jeff Gundlach said he's looking at over $200 a barrel. That's going to affect a lot of the economy, and a lot of companies. And
I don't know, Peter.
who knows? I mean, I don't know. Nobody knows. And
I
anybody
don't.
who says they know can't be sure.
I don't see $200 a barrel price of
I don't know.
oil because today, when oil is what 115 or something,
Yeah, I
we
did see.
already.
Yeah, 112, I think, last
Yeah.
I looked.
Okay. So we know, not only we, market knows all available supply of oil on daily basis. We know all available needs for oil on a daily basis all around the world. And there is no a factor that unless there will be some kind of huge interruption of oil supply, some kind of a um,
Wait, let me just show you something.
yeah,
I
yeah,
forgot one
nothing
chart.
need to happen.
Look at this chart.
Yes,
You see that? All those top lines are average for 2018, 19, 20, 21. And this blue line is the one that I circled, is this year. This is not a good trend, and this is all available supplies for the world. It's the total liquid stockpile. So right now, for 11 weeks, it's been going down. It went from 1.8 million to 1.7 million. So it's not going up, and this is a time when things should be growing. Now, people are going to be driving more. COVID's gone away, and some economies are going to open up. That's going to demand more oil. No, this
but it's
this
all Peter. But it's
how
all
much
well
is there going
known.
to be shortages of oil?
All the oil traders know that in the summer people will be driving more.
Yes.
So right now they would already bring oil at least to 130, $140 level and keep it there. But they can't.
Well, I
They
wonder where the
just can't
futures
do
are.
it.
You know what? That's a good question. What are the oil futures? I haven't even looked at that. It's a good argument. I'll have to look at that for next week, maybe. But maybe the oil futures are saying 200. But whatever it is, it doesn't mean they're right. I mean, it's again, the markets know what is the theory of efficient markets is that all known information is absorbed into the market. So if somebody company makes an announcement or some company, it gives out good financials, it's absorbed very quickly into the market. But here we're dealing with great unknowns. And this unknowns is efficient market theory that it cannot be tested on unknown theories. In other words, it could be a black swan. There are things happen where, like Ukraine, where nobody can predict it. But this is quite a possibility. And I'm not saying I know. Look, I'm still I've got a lot of cash. I've got my bonds, which is maybe 35% now, but cash is maybe 20% now. And I've still got a lot of stocks, but I'm using very defensive stocks, that are going to do well in any atmosphere. So I had to get rid of certain stocks, and I've been naming them, every week. And I've got another this week that I think can do well in almost any environment. But, but again, if you knew exactly where it was, then you could make a few, make a fortune in the futures market too right now, but nobody can be sure.
Yeah, if well, basically you can if you put just let's see oil portfolio, for example, futures, different months of expiration, and if you are
Mhm.
accurate enough and don't take too much risk, yeah, it's possible to make it. It's not just the markets that I'm attracted to. I love the stocks and like high tech companies, and just
Yeah.
simply bet on the supply or oversupply or undersupply of oil. Well, it's a different proposition. I'm not
Unless
criticizing.
it could rock the economy. But I agree with you. Look, I'm not changing that much of my investments. As a matter of fact, I bought 2/3% of Google because I didn't want to buy selling more options because I've got enough options between that I've sold on Amazon, Microsoft, and KLAC, where I'm saying this is too much risk. So I just in my IRA, I just bought 2/3% of Google and I looked at Google and it's dead. Its debt is almost zero, and it has all this cash on hand. So if there's inflation in interest rates, it's not going to affect the Google. I mean, and I think it'll
Yeah,
grow through anything. And if I hold it for 10 or 20 years, it'll probably keep growing like it has in the past, and it'll be tremendous. So again, but there's so many. The whole market is built on a lot of things where if interest rates go up a lot or oil and energy goes up a lot, as example, consumer discretionary, if oil goes up to $7 a barrel, people are going to have to cut back somewhere. We had that Reuters poll I had showed that they're going to cut back on vacations, on restaurants, on certain discretionary spending. I mean, something's got to give at some point. When if energy costs go up, it's going to take money away from something else. So again, I don't know. Look, the market could gradually keep going up. It's a wall of worry, and that's why I'm in the market. Otherwise, I just get out of everything, and I just say sell. But I'm trying. I always like to look at them more as businesses. The dividend stocks. I'm just buying businesses, and if I buy a dry cleaner or a gas station, whatever, if I was getting into that business or whatever, I wouldn't be saying, oh, its value is up or down today. It's a stream of income. So that's why it's a safer approach.
well, as you know, I don't touch high yield dividend stocks already for more than 2 years now, and
No, really.
essentially, I even don't like to think about them because uh, every time now and then you see probably even better dividend stocks than the ones that I have. But it may be only today, maybe tomorrow situation will change. So I will start in that way. Do some selling and buying and get out of the positions, and I really don't want to do that. That's why
Well, some of the Pfizer you have, right? And
Pfizer, yes, I
that's a
have.
pretty high yield.
Well, the now is not great. Actually, it's under 3% now because
Oh,
the
it's
stock
under three now. Sorry, I thought it was higher.
still keeps going higher and higher.
Right.
And what I expect though is to see one or two or both of them. It's raising their dividends and buying back their shares, which all of them or even one of them is very welcome development. So I
Mhm.
keep Pfizer, but not it's not high yield dividend stock. But
Right.
my position in Pfizer, I have probably 15% of my high yield dividend stocks in Pfizer.
Right. Right.
But
Yeah.
even
Well, I buy very selected ones. Look, I buy any dividend now over 2% or even a little less if I see huge cash flows. I mean, if I see a 20% cash flow yield where they're making 20% that they can use to grow, to pay off debt, to buy back shares, then I'll even take two these days, like Dick's Sporting Goods, which you didn't like. That one's okay. I like Yuan, it's fertilizer company. That's up like 30, 35% in 2 weeks. That was a win for me, but I only put a 1/4% in. But, I'm
Mhm.
only dribbling into these things. I mean, I have core holdings, and uh, as a matter of fact, I'll discuss it now. It's this. We may actually hold the show more than 30 minutes if we begin now. But the so this is a core holding for me, and I haven't even told a lot of people about it because I liked it so much. I liked it at 8. I liked it 10, 12, 13. Now I still like it, but it's not quite as exceptional but it's now 14% of my portfolio. So it's called Slate Grocery REIT, SRRTF, and it used to be called Slate Retail REIT. And it's interesting, you'll find, Sasha, because it's a Canadian company, but they own U.S. real estate. And
Mhm.
this is a niche in a way. People miss this, and I found a few over the years, Canadian companies that are in the U.S. where everybody's missing it because the U.S. investors don't go to the Canadian market and look for these things, and they're small, medium or small cap, whatever they are. So they're great opportunities. Oh, that's SRRTF, not SRRGF, by the way. So we're correcting that. So anyway, so this is an interesting company. It's 100% grocery anchored open air shopping centers, which I love. I haven't liked malls for a while, but they're local shopping centers. And if you go to a local shopping center, and when I travel, I see every grocery oriented shopping center is filled up to the gills. Because people are there anyway. So if you have a shop right there, it's so convenient. You don't have to go to the mall. It's easy to pull into. Um, a lot of their malls are in the south. Their shopping centers are in the southeast. So they're in growing areas, largely Florida, North Carolina. These areas are packed and getting more and more packed. They're very high occupancy, and they continue to be high occupancy, but also they're getting very nice raises on their rent each year. So even if their debt to assets is about 50%, somewhere in that range, but I'm not overly worried about it because they keep getting big raises on their existing property because they're in demand and some of them were too low. Also, what's very nice is during COVID, they went out and they bought a bunch of shopping centers, and they bought them at really big discounts because the market was tanked. So I don't know what percentage they added, maybe another quarter of their assets, but they bought these at very high cap rates, which is like the return. So this is just going to improve it. So the dividend on this stock is 6.1% today, which is unheard of in a way for a safe REIT to me. And if you look at the ratios of this compared to any other American REIT, like ADC's okay, UBA, some of the others that I've considered, but now I'm out of, um, generally much better ratios on everything. They've increased their dividend, not speedily, but about 20% since 2014. So it's just up, up, and up. But I feel like it's the safest of the safe. I mean, if open air groceries aren't doing well, I don't know what will, and again, with high occupancy. And so I think it's very well run. So again, it's now 14% of my portfolio. Some of it I even put in my Roth, which I only put what I feel is the safest investments. So SRRTF to me is still a winner, and it's certainly something to hold and get a 6% yield.
Yeah, that's not bad. I believe that market cannot make any substantial gains without participation of high-tech stocks, giant stocks like
Yeah, that could be
Nvidia
true.
primarily. I've also established quite a large position lately in Qualcomm. Qualcomm is a premier company in chip manufacturing, and what I discovered is it's paying almost 2% dividends.
No.
So I started to think, well, if I will own Qualcomm, and people believe, the analysts, that quite often often they're right than wrong, because they predict that the price will go into 200 and to probably even $230 a share by second half of the year.
What is it right now?
It's about 160 now.
Okay, yeah, yeah. There's some very undervalued tech stocks. That sounds like one of them.
Yeah, and I mean, recently, let's say a month ago, it was trading probably around. You can see on the chart, it was as high as 180 a share, so it's 155 now, 155 and a half. So I think that there is a room to grow. As you see, the chart is slowly started to move higher from
Hmm.
its bottom, and it seems to me it's not a bad entry point, especially if it's paying almost 2% dividends. So in a way, from purely dividend perspective, it's not great proposition, I would say. But as a combination of possible upside and the fundamentals of the company, I think probably it's not a bad position. So it's my second biggest position after Nvidia. Nvidia is a unique company. It's I, for several quarters now, it just keeps positive surprises all the way, every quarter.
Mm.
And it went down, of course, with the market in the last few weeks, and it's still trading around maybe 280 a share. But I think it could easily go well over 300, maybe even 325. So we'll see. Yeah, it was trading just a few weeks ago around 330 or so. So I think Nvidia probably, hopefully, will not disappoint me.
Hopefully.
Yeah,
Do you think though that with these? I mean, look, I think you're right. I think Microsoft, Google, Amazon,
yeah,
probably
all the
Nvidia, KLAC are very undervalued. I mean, when you look at Amazon, 40, the analysts are saying 4,500, 4,300. In that range. It's at 3,300 now, maybe. I mean, this is a big gap in what projections are. But the only thing is, I mean, I don't know what will happen this summer, but I'm very concerned that there will be a like a panic.
Peter,
It happens a lot of
again,
summers.
everything what I said about Qualcomm and even Nvidia, it's not buy and hold preposition. Period. You can't do that. You
Okay,
should
I like
say
buy and hold.
absolutely. You should sell, for example, puts on both stocks. On Nvidia, I sold quite large position, about 300 puts. So far, I'm making pretty good money on that. I sold when the stock was $220 or so. So it's already move substantial move from 220 to 280, which is today, right? And I think there is still room to grow another $40, $50 a share. But again, I don't own shares. I just so basically what I'm
Do you
doing
hedge
is
when you do that?
they're all
Do you
they're
buy
all
a put
very.
underneath it in case it goes against you?
Not really. I saw that at 220. I mean, how low Nvidia could go. So the market went
I
down.
don't know.
Nasdaq went down over 20%. So I figured out even if it will go another 10%, so Nvidia will go maybe to 210. But I couldn't see it breaking 200 because it was 340 just a few weeks ago. So what could
I know
happen?
it was very much higher.
Nvidia reporting every quarter it beats expectations. So how Nvidia could go below 200? I just saw that this is me. So now I've collected a very very heavy premium on this put. So now I frankly don't care. Now I wish I would sell 320 puts, not 300. But anyway, it's done deal.
Well,
So,
it's either way, it's a win.
yeah, it's a win either way. Now on Qualcomm, I had more complicated strategy. I had a strategy. I sold 180 puts and I bought 170 puts. So I've made very good money on 170 puts, cashed in. Got exercised on 180.
So
So my price of stock is around 155, where it is now. But I sold already after I acquired stock. I sold covered calls. Actually, they're expiring this Saturday. I sold about 16, 160 calls. So hopefully it will stay below 160, because if it will go higher than 160, then it will have
right.
to roll over
Well,
this.
your bullish calls have worked out very well to date. It's I'm just afraid of the hot potato, but maybe I'm wrong. Listen, I have no idea. Nobody knows, but I'm afraid there's a hot potato going on, and once it hits, it's going to be like, oh my gosh, if there's momentum downward, people are going to panic possibly. I mean, it's happened many times before. As a matter of fact, it happens in a lot of years. It hasn't happened this year, I don't think. Well, it did a little bit, but I'm saying sometimes you get big sell-offs, especially when it gets to the summer and you're getting to, two things are going to happen in the summer. Things get a little thinner on trading, but also I will see where oil goes. I mean,
Well, what you can
I
do,
think oil might go so high it scares the heck out of people, and it should, because it's inflation, and the Fed's going to have to try to control it, and it changes everything if we get into a long-term inflationary environment. Nobody knows. Are we in a short-term inflation? A lot of people say it's transitory, and other people say no, we're in a long-term trend now. I mean, look, at the beginning of the '70s, when we had a decade of unbelievable inflation, in the beginning, somebody might have said, "Oh no, no, this is just transitory." Nobody knew that it was going to come. Talking about interest rate, mortgage rates at 18%. I mean, I don't think we couldn't possibly get there now. Heaven forbid. But I mean, but even if we got to an environment where mortgages go up to 5%, 6%, or the 10-year goes up to even 3.5 or 4, at some point, it's going to really cause a lot of slowdown in the economy. And if inflation keeps igniting, it's going to start straining a lot of budgets. A lot of people are going to be hurting. So,
well,
but who knows?
all you can do to protect your portfolio, especially from black swan situation which could develop, just to buy S&P 500 puts. There is nothing else you can do really in
You're
this.
right, and I didn't do that, but because again,
No,
I'm
I'm planning to do that in the second half of April. I'm
oh, interesting.
Yeah,
So
second
you,
half of
so
April.
you are thinking that around the second half of April, the market might go down a lot.
I think that it will hold its own. Probably will go higher in first 2 weeks of April, and then
Oh,
second
interesting.
week of April, second half of April, it will sort of will stabilize somewhat. But you see, this is critical chart where you see the top was around 4,800, and it's getting there now. But I don't
Mhm.
believe that it will cross 4,800. It
Yeah,
will.
it is at the sort of getting in that range of where it was. The second highest, I can't point because not there, but if you look around November to December, there was a plateau there too. You
Yep.
know,
Yep.
and that looks like almost, except for that one peak,
Hmm.
which is I think called a Head and Shoulders almost. Now that I see it, I don't know what that means. The Head and
I,
Shoulders.
I think it will go to 47, maybe 47.50, but not higher than that.
Well, that's not
Once
much.
it reach there, and if it will not cross 4,800, but will somewhat be below even 47.85, but will not get to 4,800, that's time starts buying the protected puts.
And
As
how
soon as
low do you think it might go? And if you were going to buy, but by the way, I mean, maybe it pays to buy some protective puts long term now. For if you think but how low do you think it'll go starting in April after that? If you were guessing,
it would go probably down to 3,500.
oh my gosh.
Yeah.
Well, that's interesting what you're saying because you're talking about making 100 points on the way up or 150 on the way up, and you're talking about down 1,100. So the risk reward, you're going, what if I get caught in that? It certainly starts. If that was the case, maybe I should look at some puts in it. And you think it'll go down till I'm guessing September or something, or how long do you think it'll take to go down there?
Probably, yeah, probably all the way, maybe even to November. Probably,
Yeah, that makes sense. Again,
probably
it's
to November.
a
Uh,
scary time, and with oil prices
yeah,
going up, I think people will get
Peter,
panicked.
there's nothing wrong to start building up position even now, because especially now, you will probably start buying down out of the money puts. Let's see, 4,200, or maybe even you know what, even 3,800 wouldn't hurt. But
It probably
buy
doesn't cost much. You could make a lot of
it doesn't.
money if you're
Absolutely.
right about the call. You buy a third. I'm going to look at that. Maybe for September, November, because I mean, I wouldn't put a lot into any one option
No,
like
no,
this.
no, no.
It's,
It should be a small part of your portfolio, but it'll
exactly
protect, including
right.
high yield dividend stocks. They will go down for sure if it's such a massive move from 4,800 to down to 3,500.
Yeah,
They
that would
will
be good.
go down for sure. So even dividends will not cover you that much. However, the protective puts will, big time.
Right.
So
Well, I
this.
would add a little footnote. For me personally, I'm I bought companies I believe that can withstand inflation or higher rates, and I think they could do well in any environment. So even if the price goes down, it's like I said, if I bought a dry cleaner and it was only worth 20% less, I'm not selling necessarily if I'm in the business, So I mean, I'm hoping to buy and hold my dividend stocks for life unless I
Mhm.
see a fundamental change. But you're right. If inflation gets too high, it'll affect everything, and certainly the prices. But that's why cash may be king. That's also a hedge. So I like what you're
Absolutely.
saying, but you know what? I'm going to look at how cheap it is just to protect everything because
Yeah.
I,
But
I am
I
not.
mean,
I'm not
one
liking the picture right now.
what I would suggest though, don't buy just one type of puts, like say 3800 or 3600 or even 4100. Buy a bunch of puts with different expiration dates and
Spreads.
different intrinsic value. Just spread it all over. And the lowest is say 3500, the highest is say 4250, for example.
I may
And
do, I may
all,
do that with a small percentage of my portfolio because
yeah.
I'm very risk averse, even though I play in this game. But but I think you could be right, and it could be a very worthwhile risk reward ratio. Thanks for that
Yeah.
advice.
Okay. Anyway, we discussed some of this stock propositions and some covering tactics to protect your portfolios. Have a good luck during this week, and we'll see you
Bye bye.
next Wednesday. Bye, everybody.
Thanks.